What's going on, traders? Yes, the SPACs attack is back. And guess what? I'm not alone anymore. My man Chris is here in the back, ready to get at it. So definitely smash the like button. We got 4 deals today, guys. So we're going to be going into those deals. Stay tuned. And like always, smash that like, hit the subscribe, and let everybody know this is the SPACs attack. What's going on, traders? Yes, I know out there it's been a struggling environment. Chris and I will talk a little bit about that and kind of our emotions in the market. But like always, go ahead, smash the like button if you like the SPAC game, and we're going to talk a little bit about them. We got some deals today. We got a great guest coming on, right, Chris?
That's right. You know, we have one of the leaders in the industry, Kristi from SPACInsider. Many of you out there who have followed SPACs, you know that site, you know her Twitter account, getting those deal announcements out in the early morning, sharing the details. I know it's one of the accounts I follow. I look at each day. But yeah, 4 deals today, Mitch. And we also had, a deal called off once again. So last week we saw a deal fall apart. And today we had one of the most high-profile SPAC deals called off. So we got a lot to get into. And of course, we've got that exciting guest coming on a little bit later in the show. We'll get Kristi's thoughts on the market as well. A lot of red out there, Mitch. One of those days where maybe you just, close the computer or walk away for a bit, because it's bleeding out there.
Yeah, these are one of those days where you got to understand how to really just manage your positions. One of the things that I always talk about is, we always know once we in our positions on the reward side, but really it's always comes down to risk management, and I think this is times where you really start understanding, hey, do I know how to manage my risk? And do I know how to go ahead and continue playing the game repetitively versus just coming in and out of the market? A lot of traders are going to go ahead and start realizing that, hey, if you stay in the market, eventually, if you don't understand how to play the game, usually what happens is you just give the gains right back. And so this is very important for you guys to go ahead and master your skill, your process. And just like we're talking about SPACs right now, I'm in some red in some SPACs, but that doesn't have me freaking out. What I'm going to do is have a planned attack these next couple of weeks of how I'm going to manage my risk and how I can go ahead and get out with a gain. Of course, like always, this is going to go ahead and take some managing. It's not just going to be perfect. Like today is one of those days where instead of averaging down, I'm looking to see how bad we get into the red. How far down can we get? Because if I just go ahead and just start throwing money, I can end up with no money in my hands. And that's what I don't want to end up right now. I'm okay with a downturn, but what I want to do is I want to catch the scoop when we're going to come back up. Then that's when I want to go ahead and start adding some shares so that I can catch that bounce. So, hey, I know it's a troubled time out there. I see a lot of people in the chat worrying. It's time to put your hands on your seat, watch, and just kind of figure out what you want to do. And times like this, what I like to do is just more focus on weekly supports. Where's the next level? Can we stop there? Can we stop at the following level? Can we stop at the following levels? And I'm not looking at dailies. I go even further back. Weeklies and monthlies are going to help you out in these situations. But hey, like always, let's turn things around, Chris. Let's bring some headlines in here. Let's talk about some positive news. Let's talk about some deals. Let's talk about what we're seeing out there. And like always, Chris, bring us back to those headlines.
All right, guys. Yeah, let's get into headlines today. Up first, we have PSTH. So Pershing Square called off the SPAC merger to take the 10% stake in Universal Music. Will pursue a traditional SPAC merger instead. This comes after the SEC objected to the structure of PSTH. So remember that PSTH was going to, take 10% stake in Universal Music. They were going to create a SPARC. They were going to do, a new business combination as well. SEC essentially saying they weren't sure that that structure fell under the New York Stock Exchange listing requirements. They objected to it. Rather than get into a lengthy battle, Bill Ackman, decided, hey, we're not going to do the PSTH Universal Music deal. Instead, we're going to acquire a different company, but Pershing Square, the parent company that Bill Ackman runs, is still going to buy that 10% stake, apart from the SPAC. So still bullish on Universal Music, but they will not be doing a SPAC deal. So a couple big questions here now are, with PSTH back to the drawing board, how quickly will a new target be found? A lot of investors did not like the way the amount of time that it took for PSTH to find a target. Also, Ackman said, that they were in talks with a iconic company for quite a while. So, I don't know how many other companies Ackman has looked at. So I think this could be slow moving, or Ackman could, rush in to get a deal to kind of, get this SPAC out of the way. But shares trading down today around $20.30. That's close to net asset value. Also, the SEC now getting involved 2 weeks in a row. So that could be a trend to watch as well. We have Velodyne LiDAR, VLDR.
Sorry to interrupt there.
Go ahead.
Just wanted to show a little bit of something here off of Ackman's kind of Twitter. And it kind of shows that he even was surprised, I think, in this kind of ruling. Just wanted to show here. He was talking about here on the 22nd how the next kind of, they were starting to do the analyst day. He was definitely looking towards this deal going through. So I just wanted to point it out that I think even Ackman himself was stunned about the ruling this morning. And I think that right there, it shows that, hey, just red flag, definitely start paying attention to the deals. How are they being closed? What is the deal? And also how much each company is getting. I think part of that, this deal was way too complicated for the investor to figure out how much they were actually owning of the company at the end. And with that being said, I think the SEC just kind of said, hey, you're going to need a degree or something just to understand this deal. So let's take this off the table and let's keep it to what it should be. And so I just wanted to state that, because I think there's two sides also. It's not a good look that we're getting this kind of deal to pull off, but it's also an understanding that I think even Bill himself thought this deal was going to go through, and now it's just turned around.
Yeah, and we'll dive into this more with Kristi as well. I was surprised that this one got called off, because we have had, months to kind of digest it. But again, Mitch, as you said, very complicated deal structure, which I think really kept people, from even wanting to invest in this deal. Velodyne LiDAR, VLDR, shares trading down. The CEO announced that he is leaving the company effective July 30th. No reason given. They're using a search firm to find a replacement. So the company also announced guidance. So fiscal 2021, between 77 and 94 million. Analyst consensus currently 93.76 million. So on the higher end of that, company will report financial results August 5th. So that's coming up fairly soon. Keep an eye out on this one falling. It's one of the LiDAR leaders, but again, a new CEO will be needed to lead the company forward. Couple vote dates set: RTP, Joby Aviation, August 5th, and SVAC, Sixtera Technologies, July 28th. We will add those to our calendar. On Friday, shares of ATM are up 1.1% on their deal. FGNA, their merger with OppFi approved. Shares were up 8% on Friday. We had EVLV, Evolve Technology, which changed over tickers this morning. Moving higher today, shares were actually halted. It's another one with heavy redemptions, low float, so keep an eye out on that one. Shares of Virgin Galactic, SPCE, also up today. Blue Origin flight coming later this week. That's the story I called out, that we could see another move up in those shares. Then we turn to our 4 deals. So we have IIAC, a merger with Zegna. This is a global luxury company. So the Zegna family will retain control, owning 62% of the company. Deal values the company at $3.2 billion. Vertical integration, made in Italy, started as a textile business, now has some iconic brands, including Thom Browne, which was one of the first luxury brands that ever was offered in China. Keep an eye out on this one. Well-known brands. They have a presence in 80 countries, 296 stores, annual sales of over $3 billion. This is an interesting one. One of the larger deals we've seen recently. And we have CPSR merging with Genesis, which is the maker of Plenity, which is a weight management drug that was approved by the FDA. That's going to be the big story for this company. They're working on, their manufacturing for this coming later this year. Company valued at $964 million. So they see revenue of $26 million this year, $171 million next year. So Plenity makes it easier to eat less and feel fuller. All about portion control. So they're targeting over 150 million Americans, many who do not use a prescription alternative. So a big market here. A cost of $98 a month, $1.75 per meal on average. So over 48,000 members have already signed up for Plenity. They also have a partnership with Weight Watchers, which could help them, gain more customers in the future. This is one I want to dive into, on a different day, because I actually really like this one as I read more about it. Then we have ENNV merging with Fast Radius. So this values the company at $1.4 billion. Pipe of $100 million includes Goldman Sachs, UPS, and Palantir. Shareholders will own 24% of the company. So Fast Radius, all about Industry 4.0, a cloud manufacturing platform designed to create an ecosystem of software applications. So they've worked with more than 2,000 customers, including 45 Fortune 500 companies, targeting automotive, aerospace, medical, consumer, industrial, medical, and technology. Made over 11 million parts. So some of the customers listed in the presentation include Aptiv, Toyota, Rawlings, Cobalt, Collins Aerospace, and an Airbus subsidiary. Ford Motor Company also listed as a case study with that partnership with Aptiv. So Fast Radius targeting a $350 billion market. They also have micro factories, which is one of those growth segments we've talked about with other companies like Arrival. So they have 4 micro factories, including one in Louisville, Kentucky, on the UPS Worldport hub. So a great relationship they have with UPS. Revenue $25 million expected this year, $103 million in 2022, $246 million in 2023. So 100%. On average through 2025, where they see revenue hitting $600 million and profitability. And then we have OCA, Omnichannel Acquisition Corp, announcing a SPAC merger with Kin Insurance. This is a homeowners insurance company. They are a direct-to-consumer platform. So new investors in Kin Insurance include Stephen Ross and Gary Vaynerchuk, Draymond Green of the NBA, and Rory McIlroy of the PGA, already investors in Kin Insurance. So we actually have a couple athletes attached to this company. OCA shareholders will own 16% of the company. Kin operates in Florida, Louisiana, and California right now. They're the only pure play direct-to-consumer insurance company. They offer a platform where you can find out in minutes how much it would cost to insure your home, lower retention compared to Hippo and Lemonade, their competitors. Along with the SPAC merger, they announced plans to acquire an inactive insurance carrier that has licenses in over 40 states. So national expansion expected by 2025. So this is an interesting one. This is from Omnichannel, Matt Higgins, who was on our show, of course, not too long ago with Gary Vaynerchuk. They're going to target male social media and brand awareness campaigns to really drive home what Kid Insurance is all about. Also looking at expanding in auto insurance, life insurance, umbrella insurance, and some non-insurance products down the road. So growth of 139% expected annually from 2019 to 2023. Written premiums were up 200% year over year in the first quarter. The revenue of 2021, 98 million expected, and then 234 million in 2022 and 431 million in 2023. And the company has positive gross profits right now. Again, Kin Insurance with Omnichannel. So that was those 4 SPAC mergers and the headlines. I know that was a lot to get through, Mitch. What do you think?
Well, I'm going to be watching to see what's going on with these newer companies that come out. One of the things that I expect is that, at first it might not be so attractive just because of the market environment right now. But doesn't mean that I can't watch for these to come down towards a level that I definitely might want to go ahead and get in. Just like I've been watching, not to bring up a stock that's going down right now, but more along to point out an opportunity that I'm starting to see is I'm still watching Body right now. We're down towards 775 right now. I'll put this up right quickly just to talk about it. Stocks like this is definitely interesting me because at the end of the day, we're talking about a company that's making money, right? There's revenue in this company. It's not like something that we're just going into fluha, talking about potentials. I literally am a subscriber to this company right now. So, I know what they have to offer. I've been in it. I use this really not necessarily on an everyday. I have it more along for my fiance that likes to work out at home. And some people do like to work out at home. So I think that's something that you're going to start seeing a trend that stays. And with that being said, I think in the long run that pays to the bottom line of Beachbody. So we'll see if we can hold this kind of $7 look. Right now we're at a low of $7.19. I would love to see it under that $7, getting closer towards that $5. That would really make me excited, and I'd definitely probably be going after a stock if this one could get down towards those levels.
Yeah, definitely. Revenue and recurring revenue, right, Mitch? You pay them a monthly, figure to keep that plan, and they have millions of customers who do the same. So that's what we like to see, right? Yep. Is recurring revenue. So that's an interesting one. And also, Mitch, as we see some of the COVID concerns and the work from home trades start to pop up again. You got Body, who's all about working out at home. So pay attention to that as a work from home.
New bike also coming out.
A new bike. Yeah, we got the mixed fitness. We're probably going to see Peloton stocks start to heat up again with the COVID variants coming out. So keep an eye out on Beachbody.
Thing that most people don't think about. They just don't think about it because they're just probably not on the bike. They're not that type of people. Guess what, guys? Summer's going to go away. Winter's just around the corner, at least for here in Colorado. It's quicker than you know it. And then next thing you know, you won't want to be going outside and getting on a bike, right? You'll probably be looking to do some exercise indoors. So you could see those bikes start getting a spike going into the fall and winter months. So that's just something to point out. Me, always trying to stay with the stories.
For sure.
All right, let's go ahead. Let's have some fun. Let's talk some SPACs. I know we got someone behind me that probably knows even more than I could ever even get into SPACs. So let's go ahead and let's get into where we unlock some SPACs, Chris.
All right, guys, super excited Joining us on SPACs Attack today, we have Kristi Marvin, the founder of SPACInsider, one of those great resources out there for SPAC investors. Welcome to SPACs Attack, Kristi.
Hey, Chris. Hey, Mitch. Pleasure to be here. Thanks.
Welcome to the show. Welcome to the show. I just wanted to show, hey guys, if you guys want to check it out, definitely check out the description below. If you guys want to be a follower of SPACInsider, we have also the website there you guys can check out. But definitely, it's in the description below. So definitely hit that link, and then we'll get started. I'll let Chris do some questions first. Let it be a little bit more you guys, and then I'll come in with some of my own.
All right, perfect. So, Kristi, before we dive into the SPAC questions here, just wondering if you can give viewers, a brief background on your, experience in the financial industry here.
Sure. So, former investment banker, started working on SPACs way back in 2005, which is clearly dating me, and started the SPACInsider website in early 2018. So. Have been around SPACs for a long time now. And it's interesting to sort of watch their evolution. If anybody was sort of around and looking at some of the older SPACs in 2005, they looked drastically different than they do today. It's just a completely different market.
Awesome. So, you've have experience in the SPAC market for, multiple years here. As you said, you've seen them evolve. What have been some of the rewarding moments of, covering the SPAC market, and what gets you so excited about, being exclusive to SPACs here?
I think part of the appeal of SPACs to me was always that you weren't ever held to one vertical, like you're not necessarily focusing completely on healthcare or energy. The really interesting thing about SPACs is you get to see deals done in, one day we're looking at a space deal, the next day it's a biotech deal, the next day after that it's, something completely different to that, so it's never dull. And I also really like that the structure is constantly evolving. So there's always something new to sort of chew on and try and figure out. And, if you like puzzles, SPACs are a good puzzle to try and figure out.
Awesome. So, one of the big headlines today, we have PSTH calling off that deal for Universal Music. Kristi, I heard you in a Twitter Spaces not too long ago with the SPAC Guru trying to break down the terms of that deal. I mean, as you said, you've been covering SPACs for years. What was this just like the most complex deal that you have seen, and how hard was this to really drive home what was involved in the deal terms?
Well, it was definitely complicated. It wasn't insurmountable. If you read the press release this morning when they were talking about how they called off the deal, it was interesting. They kind of initially kind of blamed it on the SEC and NYSE listing standards and how it didn't necessarily meet the SPAC rules. But then in the next paragraph, they kind of talk about how it was too complicated for investors to wrap their heads around. My sense is that if you remember, they had already commenced their tender offerings for their share and warrant. I suspect they probably had maybe more redemptions than they would have wanted. And knowing Ackman and his personality, he is not in this to have a mediocre transaction, right? Like, he wants a winner. So I think he probably looked at the results and, given the SEC noise, was just like, you know what? This is a good excuse. Put it this way: if the share was trading much better than it currently is, I'm sure he would have pressed a little bit harder on the SEC and the NYSE.
Yeah, I think that's definite there. So, how quickly do you think we see a new deal announced from PSTH? Do you think Ackman goes completely back to the drawing board, or do you think he had maybe a plan B or plan C, since part of that deal was to acquire an additional company?
Oh, I absolutely think he has a plan B, C, D, E, and F. Most of these guys, they've evaluated multiple deals at the same time. I'm sure that he definitely has, something he's considering as a substitute. The question is, how fast can you negotiate that? The good news is he still has 18 months, which is plenty of time. It's probably a little frustrating for investors who've been waiting a year, but he's not in any risk as far as his deal.
And then, as you said, there was some talk of the SEC, being part of the reason on that, and whether that was the main cause or those redemptions, like you said. We now have the SEC being mentioned, 2 weeks in a row. We have the Ackman deal, and then we also had Momentous with SRAC getting the fine. What's your take on, the SEC, how involved they're getting in the SPAC market? Do you think this is just the beginning and they're going to, keep pressing harder and harder here?
It's hard to say. I do think that SPACs are certainly on the SEC's radar, amongst a bunch of other things. Gensler is very much invested in, not invested, that's maybe not the right word, but he's definitely looking at a number of different initiatives, particularly the Reddit investors, like GME. Will they eventually change any rules and regulations? That's really hard to do. But the simple act of saying you're investigating and enacting fines definitely has the desired effect usually. If you remember back in April when the SEC came out with the statement regarding warrant liability accounting, that had a significant effect on the market, and they didn't necessarily need to do too much, but just sort of put that out there, and it had the desired effect. So I think you'll probably see more stuff like that. I think the fine actually was a good thing though, with SRAC. There's a lot of SPACs out there, things definitely need to be tightened up for sure. I don't think that's a problem for 90% of SPACs, but it's the other 10% that are unfortunately going to get the headlines that places like CNBC will latch onto and want to make it a blanket statement across all SPACs. So if we can avoid that, that would be great.
Yeah, agreed. Lumping all of them together is definitely the trend from some of the major media companies. You mentioned with PSTH the possibility, that the heavy redemptions. That is a trend that we're seeing here with a lot of these SPAC votes. We saw with, Owlet, Evolve, where, a lot of people are, redeeming those shares. And it's been almost a tradable event where we see, lots of shares redeemed and then a lower flow and those shares spike up on the first day. What do you think of the high redemption amounts on these SPAC deals? And will we actually see some SPACs not go through on the vote? Is this the start of that?
So you're never going to see a SPAC not go through on the vote, right? The vote and the redemptions are completely decoupled. So 99.9%, I can't remember the last time a SPAC was actually voted down. The redemption number is really the more significant factor. So if you look at tomorrow's calendar, we have five votes, and last time I checked, I think 3 of them were trading below 10. And that's because they've gone X redemption. Like those deals are probably going to have heavy redemptions. But then if you look at, like Gore 6, it's trading, I think last time I checked, somewhere in the 13s. Like that is at no risk at all, right? Because why would anybody redeem when the share is trading that high? They can just sell it in the market rather than redeem. But, it's a question. Why are we seeing so many redemptions all of a sudden? I personally think the market is just way overinvested. I just wrote a newsletter that came out this morning, and I happened to be looking at not just SPACs, but the traditional IPO market, which is just on fire as well. They have, the traditional IPO market has already priced 231 deals this year, which is more than they did in all of 2020. Same with SPACs. SPACs last year did 248 deals. We've done 374 to date, right? So, and we're only halfway through the year. That is a tremendous amount of capital raised. If I remember, I think it's 197 million between SPACs and traditional IPOs. That is far and away just an incredible amount of money. So if you're IPOing additional deals, where's that money going to come from? So the other thing too is you're gonna start to see things like rotation of capital, and which is kind of like what we're seeing here. So at an announcement, at a vote, you'll see people selling to free up capital for the next deal. If it's on the bubble, right? If it's something trading obviously really well, there's no risk for that, right? But yeah, it's really, really challenging for teams right now. The other thing too is a lot of the fundamental investors that were sort of involved in SPACs in 2020, they've kind of really dried up, like they don't want to take that risk, and they don't need to, because there is just so much paper out there right now.
So you mentioned the massive number of SPACs that are out there, the large number of deals we've seen. So we had 7 deals announced last week. We had 4 deals already announced today. Do you think there's any average number of deals that need to be completed a week to kind of wash out these existing, SPACs that are out there? Is there any concern of, some of these SPACs getting close to their expiration date and not getting, a great deal for investors?
Well, so the interesting thing is we've had just a crazy amount of votes, 44 since June 1st, right? So there is a lot of movement with deals coming to completion votes and getting done. I believe we also have an additional, I can't remember as of this morning, but I want to say like 26 on the calendar for the rest of July and early August. So the deal votes are moving. I don't think that's the issue. I think the issue is the huge IPO backlog, the ones that are on file to register. To have over 300 deals in registration is just crazy. I mean, we priced 28 IPOs in June. So if we just assume, let's say 30 IPOs every month, how long will it take to clear out that backlog? 10 months, and that's assuming no other deals filed to IPO. That's putting a lot of pressure on the announced deals, right? Because the bankers are probably going to investors, institutional investors, and asking them to invest in these IPOs that are coming to market, but they need to sell something to free up capital to invest in it, right? And so what that does is just create a lot of selling pressure on the announced deals. And so I don't know if I answered your original question. What was your original question? Oh, the announced deals, right?
I think you hit on it. I want to dive into the calendar a little bit. That was part of the reason we really wanted you to come on this week. So, June has been crazy. July has been crazy. This week, we do have some high profile names. We have Microvast, Lucid Motors, Faraday Future, and as you said, there's multiple votes tomorrow. What really stands out to you this week, and how important do you think this week may be, for the SPAC market, given some of those high profile deals, for retail traders, for media, with Lucid, et cetera?
I think Lucid, for obvious reasons, is going to be on everybody's radar, right? And so the good news is Faraday Future already sort of pre-announced their vote this morning in a press release. So it looks like they're going to have a good vote, which isn't surprising given where it's trading. The Lucid deal, though, right, that Kramer will be all over it, CNBC will be all over it. So it'll be interesting to see what happens for sure. Is it critically important? I mean, if you talk to anybody in SPAC land, they will tell you absolutely not, right? If you talk to CNBC, it's a harbinger of doom, if it's a bad result. So, take it for what it's worth, what you read in the media. As far as SPAC land, it's just another deal,
Do you think any of the companies doing their merger votes this week, given the high profile of Lucid and the media attention that one's going to get, do you think the other companies are at an advantage or a disadvantage this week, as maybe SPACs will be in the spotlight more, but maybe they won't get the, ringing the bell or media interviews that they normally would on a vote?
I mean, it's deal specific, right? If it's more of an institutional investment, like usually the biotech deals are much more institutional, not as much of a retail following. It's not that important. The ones that do sort of rely on more of a retail investor that likes the press, it's more important. So, is it an advantage to sort of fly under the radar this week? Maybe if the vote result is not good. Conversely, if the vote result is really good, you want that to be noticed, and maybe it won't. So, tough to say.
Definitely. So someone who covers SPACs, obviously we have the life cycle, we have the units, we have commons, we have warrants. What are some trading strategies that, you have used as a investor, or that you look appealing to the SPAC market in terms of trading units versus common and warrants?
Well, let me just start off by saying, as policy, I don't allow myself to invest in SPACs right now, simply because it's such a tricky issue with the SEC. We do a lot of writing and analysis on the site, and as you know, that's like a big no-no in SEC land. So rather than just try to get around the issue, it's just policy that we don't invest, which is kind of a bummer, for us. But the risk is too great with the SEC. But what strategy? I mean, I will tell you what I've been seeing just talking to other people. The warrantless SPACs are becoming pretty tricky for institutional investors, right? Like they clearly, the certain type of institutional investor doesn't like them for obvious reasons. There's no warrant, right? So it's very challenging to get a decent enough return as a SPAC investor at IPO, unless that deal like really, really performs well. And so conversely, what you have in the market right now are like the total opposite end of the spectrum, which are these very small $50 million deals that come with like a half a warrant, a right, overfunded trust. People are just arbing them, and there's no in between. That's the problem right now. There's none of those deals that are sort of like in the middle. The really good quality teams, but still offered like maybe a half a warrant or a third of a warrant, something like that. That's what's kind of missing in the current market. As far as a trading strategy, I mean, it's so hard to say because it's so SPAC specific and it depends on the structure. I mean, with the rights, I mean, I will tell you, deals with rights, like if I were a team, I wouldn't want rights in my unit, mostly because, as you've probably seen, a big trade is usually, buy the right and then sell the share once it can, the right converts to the share, sell immediately, right? So, it's good if you're an investor. It's terrible if you're a team. But yeah.
Yeah. So, again, not investment advice here, but as you write up, the terms of some of these SPAC deals, again, we've seen multiple industries, space, electric vehicles, LiDAR. Have any of these deals kind of jumped out in terms of, maybe their cheaper valuation to peers or their higher growth to peers? Any recent deals, really stand out?
I mean, yeah, the Ginkgo Bioworks one always was such a mystery to me. I just don't understand why that's not trading better. And I only can maybe assume that it's because it's a biotech deal and it's a little bit harder for people to sort of like wrap their heads around what's actually going on with the science there. But that one, like I'm always just so confused by, like why isn't that one doing better,
Yeah, definitely. And full disclosure, I am long on Soaring Eagle, SRNG. That one, yeah, Ginkgo has their hands in so many different sectors. I think it's just misunderstood. They've got some subsidiaries that, maybe are undervalued as well. Kristi, one last question from me, and then I think Mitch has some questions for you. As you look at these SPAC deals, at the other end of the spectrum, we just talked about positives with the valuation. What are some red flags? You mentioned, rights. What are some other red flags when you see these SPAC deals announced that maybe make you question a certain deal?
I mean, lockups are always like a good way to sort of see what's kind of going on there. I mean, it's funny too, because people always assume PIPE investors should be locked up. They really shouldn't. PIPE investors take on a tremendous amount of risk, and I don't think people totally understand how and why. But if you're a PIPE investor, you're locked into that deal, right? And you're not only locked into it, like you can't trade out of it until the shares that you're receiving in the PIPE are registered, which is usually 4 months from close. So why would a PIPE investor subject themselves to that when they could easily go out in the open market, right, and accumulate a position which they can then redeem the share? They have redemption rights then. And so people always ask me, like, why isn't there a lockup on the PIPE? And it's like, well, for that reason alone, right? Like they're already kind of locked up to begin with, and they're taking on a tremendous amount of risk, right? And it's also, it's the fact that they're even doing that should tell you they're giving like a stamp of credibility to these to these deals simply by doing that, right? So pipe investors are always a good thing. But going back to your question, lockups are usually sometimes a little bit of a warning sign. I found it very curious that Tom Farley, who went on CNBC a couple months ago and was talking about how sponsors should be, like if they're going to be projecting out a couple years, the sponsor should be locked up, accordingly as well. And then he comes out with, less than a year lockup himself. It's like, what's going on there? Do as I say, not as I do.
Yeah, I've seen a couple people, Barry Sternlicht too, being very critical of other SPAC deals, and then, that he's got his own to worry about. But yeah, Farley definitely saw that, and I don't know how many people caught that. So, thank you for shedding light on that. I think lockups are a very interesting subject, that we could talk all day about, but I think that's going to do it for me. Mitch, are you ready with some questions for Kristi here?
Yeah, I'll jump in, and I'm going to ask a little bit more opinionated questions. Go ahead and give your opinion, Kristi. Like always, for everyone out there, this is somewhat more long so you guys can understand some thinking in SPACs. So one of the things that I brought up last week was I saw the big payout that Michael Eisner is getting out of the mud SPAC. It says on a Sportico article all the way up to 600 million getting out of this SPAC, and we know the valuation. But what do you think about these big payouts from the operators behind this SPAC, or behind any SPAC, really?
I'm not as concerned too much with that. It's a different type of transaction, right? Like usually if you see a more growth stage company, they're doing more of a transaction that is similar to an actual IPO, right? Where they're selling only like a portion, like 10% of the company. They're usually rolling all their equity, and all the money is going into just growth, right? Then you have these other companies that are a little bit older, like a Tops, right? Or sometimes it's part of a private equity company's portfolio, right? And they're looking to take the mark on that valuation, right? So it's just a different type of transaction. An older company where the original founders want to take a little bit off the table, like that's a typical M&A transaction, and that happens a lot in SPACs. I think you have to take in the whole picture of the company and figure out, like, is there still enough cash left for them to do what they want to do, and execute.
Excellent. Definitely. That's what I pay attention to. We got to have the cash, right? I mean, we need some money, right? So lately we've been seeing a lot of what so-called short squeezes in SPACs. So one of the things that I've been talking about is, do you feel, and I'll ask you, do you think institutionals are taking bigger and bigger sides on the short side against betting essentially SPACs?
I'm sure. But you have to remember, it's sometimes challenging to short SPACs for a bunch of different reasons. One, sometimes the float is just so low. The other thing too is, I've heard that in order to vote, most institutional investors will keep their shares in a cash account, which means that the bank then can't lend the shares out to so that people could short it. And so like the amount of available shares eligible to be borrowed is reduced as well. And sometimes just the cost on shorting it is just so prohibitive. It's like, why even bother? Having said that, yes, it happens. In certain deals, probably more frequently, for obvious reasons.
Of course. So definitely it's something that I'm definitely interested in. Now, one of the things that we also had was a combination of some SPACs with mentions of NFTs. So I won't necessarily go into asking you, what do you think about these specific companies, but more along, do you feel NFTs is still kind of a boom that we'll see in the SPAC game? So more your opinion on that, and what's your opinion overall on NFTs?
So NFTs, I feel like they were hot for a minute, like it's kind of calmed down a little. I would be very concerned if the NFT was sort of like the main play in the deal. That shouldn't be the main focus of a business that you're acquiring. If it is, I'd probably be a little bit concerned, just because it is so new and subject to whims of what people consider is in style. So
I mean, you saw it also, I'm sure, back when we had like that Bitcoin boom, when everything was just trying to include Bitcoin, anything into cryptocurrency. So I'm sure we're seeing kind of the same game, right? Let me go ahead and bring Chris back here. Looks like we got some questions from the chat. We'd love to do that. So definitely in the chat, if you're out there, you got a question for Kristi, this is the time. Drop it in. Hurry up.
Yeah, I don't see a ton of questions, Kristi. We did get some positive comments here, though. A lot of people just appreciating how real you are about, the SPAC industry and, providing us with, some facts for the industry and, some opinions as well with some of Mitch's questions. I do see one question here talking about owning SPACs through like a Robinhood. So you can't buy units on certain brokers. Do you think that's something that ever changes where SPAC units and warrants will be traded on like a Robinhood or a Webull? Or do you think that's going to remain, for the larger, more established brokers?
Well, I think SoFi, right? Chamath. I mean, I don't know, maybe but I would assume that you can on that one. If not, someone should tweet Chamath.
I think you can on SoFi. I think that's one of the things that they've adapted to there. But I know, a lot of people use Robinhood, a lot of people use Webull, and that's one of the big questions we always get, right, is why can't I buy warrants, on those brokers? So do you think that's coming in the future?
Well, I don't know, and here's why. The SEC, right? Like they're all about trying to protect the retail investor, and because of that, they consider warrants a little bit more, a challenging investment to understand. And so I have to imagine that there's not a lot of effort being made by Webull, right, or Robinhood right now to do that, particularly in light of Robinhood's pending IPO, right? Maybe post IPO they'll take a look at it, but the SEC, right, like is sort of that unknown factor right now, which may prevent them from really looking at it more closely.
Definitely. And then one last question here from G-Man asking about the harm that the redemptions do to the cash position. So, when we get these SPAC deals announced, obviously, it's based on the amount of money that they're going to get if the deal goes through 100%. They lay out their growth plans. What kind of impact could it have, when we're seeing over 50% of shares redeemed, less money go to those companies? Do you think it means we see a share offering sooner than later from these companies, or is it just, lower money for your growth ahead?
Well, so a couple things. Usually in SPACs, there's almost always some sort of minimum cash closing condition to the deal where the company can exit or terminate the combination if there isn't enough cash at closing due to redemptions. Sometimes they will waive it. That happened last week with was it Ardius? I can't remember which one, but they had significant redemptions, and the company opted to just waive it just to get public. In the case like that, yeah, they're probably going to have to raise money pretty quick, right? However, I will say that a lot of deals, they've sort of backstopped the trust with the pipes. So they may have a minimum cash closing condition of 200 million, but they'll have a pipe that is 200 million, right? And so they've already sort of anticipated that. They've backstopped it. In a case like that, like it's not as much of an issue. But what's interesting too is what you're starting to see a little bit more frequently now in anticipation of this is you'll see structured into these deals, founders promotes being subject to forfeiture and cancellation if there is redemption. And the reason for that is if they didn't, like if you had $100 million SPAC, right, which means the founders have 2.5 million shares. If you have like 60% of the SPAC shares redeemed, those shares are canceled. And so the post combination, the founder shares, which were originally estimated to only be like 4% of the pro forma shares outstanding post combination, are now going to be like 15%, right? And that dilution to the company is just not palatable. And so you're seeing them have to cancel some portion of the founder shares dependent on redemptions.
Yeah, definitely. Great points. Kristi, I know you've had a busy morning. We had 4 deals announced. We had PSTH calling off that deal. So we're going to let you go. We appreciate your time. Again, for anyone tuning in, Kristi Marvin, the founder of SPACInsider, you can find all her information in the description below. Make sure you follow her on Twitter as well. Kristi, thank you so much for joining us on SPACs Attack. We look forward to having you back on the show in the future.
Thanks, Chris. Thanks, Mitch. Pleasure being here.
Thank you.
Bye.
All right, guys. Another great resource here, SPACInsider. You know, one of the top names out there. You know, we wanted to bring her on, right? And you guys, it seemed to really enjoy her in the chat, right? Very open, very honest, right, Mitch? You know, providing great insight into the SPAC market, what some of these deals mean, what that redemption means, what the PSTH deal means. I mean, you guys got to hear it today, you know, when that deal was called off. And, you know, I think that was some great information. What do you think, Mitch?
Yeah, it's something definitely to keep a watch out. And one of the things that I liked that she talked about was just when we actually start looking at these deals, you really need to understand that it's separate. It's not just all in one basket. I think that's what she clearly points out there is that, hey guys, you know, let's not look at SPACs all under one name. That's just the asset class right there. And then that really doesn't have anything to do with inside the deals, how the redemptions are going to work out, where the valuation is, what the business is, does it have revenue? There's so many other questions you need to be asking versus that one question.
Yeah, you know, she called it 90%, 10%, right? You know, you got 90% of these SPACs, you know, following the rules, you know, laying out their terms good. And then you got 10% where maybe they're, you know, kind of hitting on those lines and maybe going a little too far, you know, as we saw with SRAC. And, you know, she actually said, right, maybe the SEC is needed to make some changes. And, you know, I think that's true, right? I love the SPAC market, but the SEC could be needed to really true up some of these deals. You know, that's one thing I've really called for is, you know, when a deal is announced, put the percent that shareholders are going to own, that the pipe's going to own, that the founders are going to own, put that in the press release. Don't put that in the presentation where you have to go all the way to the last page of the presentation to see the pie chart, right? Put it in the press release. Lay your terms out, you know, be fully transparent. So that's something I look for, you know, with these deal announcements. But guys, let us know if you want Kristi to come back on the show, you know, in the future. Press 1. I enjoyed that interview, Mitch, you know, and I look forward to hearing more from Kristi. As someone who knows a lot about SPACs, I still learn stuff from some of these experts like Kristi all the time. So a great resource to have here.
All right, so let's go ahead. Let's take a look here at our watch list, see what other stocks we got moving out there. Right now, we have, of course, Owlet bouncing back about 12.5%, really just getting back above that $10 level. So good level there for Owlet. And if you got it on that dip, I mean, hey, you're definitely not mad about that.
Yeah, and if you follow me on Twitter, you saw me call Owlet out on Thursday or Friday from vacation, right, that they had heavy redemption. The float was going to be smaller on this, and I thought it could make a move. And, you know, you have Owlet, as Mitch said, getting back above that $10 level. You know, these shares were around 9 something, you know, at the merger vote date, past the redemption period. Mitch, another one moving that's newer to our watch list is AVPoint, AVPT. We had TJ on not too long ago, right? And he talked about how they were going to introduce some new products. Also, how they were going to get some analyst coverage, right? You have shares up 11% today. I know they got an analyst note last week. You know, as TJ said on our show, right? This is one where it looks like maybe it bottomed out, but below $10, and it could be headed higher with some of these analysts coming in, you know, and supporting this company. What do you think?
Yeah, I mean, definitely one thing you are seeing is U-turns, right? And so one of the things that you see there is volatility, meaning that you can make money and you can lose money here. So one of the things is you got to start, if you're dipping your toes, I don't mind that. I can see why you'd want to dip your toes if you're going to get 10% pop backs. But definitely just be careful. right now you're going to see a bunch of multiple lows. So we're going to see if those lows hold in the next couple of days. But if you did take your shot and those are what you're risking off of, understand that, hey, all right, so now I got my point in the sand. Let's see if this really does get some momentum. One of the things you want to be seeing is some good volume coming into your stock today. That could show some sign that, hey, people are buying the dip.
Can you pull up EVLV Evolve? So this is the one that started trading today, right? Under the new name, the new ticker. If you scroll back a little bit, yeah, look at that. So, man, Mitch, I mean, this thing was trading at like $9.50, right? It's post redemption. You can't redeem your shares anymore for net asset value. And then what did we see? We saw a huge spike today. But how long did that spike really last, right?
Yeah,
because
that's
again,
dangerous.
this becomes a low float trade, right? Because you had heavy redemption. So this is something that Mitch has cautioned, looking at the chart, and I want to caution too, right? It's a tradable event when we see these low float names, but it's also a trade that many people are getting into, and they are more than comfortable selling on that initial spike. So don't be caught just chasing some of these low float names, as it's really a one-day trade. And if you missed out, you could actually see these shares go right back down below $10 in the next couple days.
Yeah, one of the things that you can clearly see is it's not too big of a share size either. So just be careful too. It's not just load the boat and play like this. This has a lot to do with understanding what supply is on the ask side. And so one of the things that traders will do is they'll start looking at further out on the level 2. Where are there some big sellers maybe lining up some orders that we can attack, because you need supply on that side for you to go ahead and buy up and push the stock up. So this is really when it comes down more into day trading skills and an understanding of order execution, and also understanding how you can really look at the order depth, which is really going to matter here. And so just be careful. I don't think that, no one can make this trade. Yeah, there's some skilled traders that are making these trades right now. They're understanding that these pops are coming, and they're ready right at the open. As you can see from this stock, 9:30 open right here at 10:50. And in less than 2 minutes, we're up there at 1290s. So that just shows you right there that hey, that's some high volatility. And with that being said, one thing that you might see on a stock like this is when the spread goes gapped. And the spread can gap 20, 50 cents. And so you have to understand that hey, my out might be the only way I can get out is maybe on the bid side, 25 or 30 cents down. So just take that all into consideration, learn from it. And if you are a day trader, you're trying to nail a trade like this, understand, like Chris said, that, hey, these pops aren't lasting. They're coming up, down, up, down. So with that being said, you have to catch the momentum at the right timing.
Yeah, and there's going to be a lot of that this week, Mitch, right? We've got tons of votes this week.
Timing.
We've got lots of them, as Kristi said as well, trading under $10. So I think we're going to see some heavy redemptions, right? Obviously your Lucid, your Faraday, you're not going to see the redemption, right? Because they trade well over that $10. But any of these ones that trade close to that $10 level, you're going to see heavy redemption. And then as they change to the new ticker, you're going to see those volatile swings because the float is decreasing in size. But be careful. Don't get caught chasing these. We've got a big week for SPAC votes. And I don't want anyone to, get caught chasing these things up high.
Yeah, be careful. There are a couple names out there, but I can at least say that a majority of my top 5 or top 6 stocks are stocks that are doing those merger votes or have already switched over. So that's one thing to definitely point out. So it doesn't seem like it's like a new announced company, new announced deal companies at the top. And so with that being said, I'm leaving those companies alone right now. Those are, I'm stepping out of those. I'm just not focused on those. Once they come into, let's say, merger vote day or something else, I'll be paying attention to them.
And Virgin Galactic trading higher today, guys. I called that one out, right? We got the Blue Origin flight this week. Again, it's a tradable event, but if that Blue Origin flight is not successful, if it has problems, and probably regardless, you could see Virgin Galactic shares trade down over the next couple days. You know, this thing rallies into news, but then we usually have the sell-off on the back end. So be careful chasing Virgin Galactic higher as well. This is one that I own. I've pointed out many trends with this one, many stories. You know, pay attention to the story and don't chase, you know, too late in the game.
All right, guys, that's going to do it for us on SPAC's Attack today. Yes, we had a great interview from SPACInsider. So if you're just joining in and you didn't catch SPACInsider's interview, definitely rewind or catch this at the end of the day. Hit us up in the comments below. Who do you guys want to see next? If you guys got an insider or maybe an account that you guys have really followed and think that they're great in the SPAC industry, let us know and we'll go ahead and reach out. All right, Chris, that's going to do it for us. Up next, you got the Power Hour. We'll see you next time, guys, on
Bye,
the
everyone.
SPAC's Attack.